Hello everyone, how are you doing? Welcome back to section 6 for mastering inventory. Hopefully you're doing good for today, and let's go over this section 6 and see what we can do for today, okay? So in section 6, the first question says the company, it's a startup company in 2018 using the periodic method and LIFO costing. So section 6 is focusing on the LIFO, which is last in, first out. That means the last layer of purchase that you did, that inventory is going to be sold first. So last in, first out. And we are going to use periodic method. So normally under LIFO method, we don't use perpetual. So if a company is using LIFO, that means they are going to use periodic method. Also, LIFO is not accepted by International Financial Reporting Standards, IFRS, International Accounting Standards doesn't accept LIFO as an option. So if we see LIFO, that means it's only accepted on under US GAAP. That means, let's say, if you have a US company, let's say Chevron, for example, they might use LIFO, but same oil company like, for example, Shell, which is a French company, I believe, something like that, because they are working under International Financial Reporting Standards, IFRS, so they don't have the option to use LIFO. So they have to use either FIFO or average. So LIFO is only acceptable under US GAAP. And again, if you use LIFO, that most probably it means you are doing periodic method of accounting. So the company is a startup company. That means beginning inventory is 0. And they mix the following purchases. At the very beginning in January, they purchased 600 units at $16 per unit cost, and then they bought a few more times. Total units that purchased in the year is 13,200 units, and the total cost for the inventory is $285,300. The year-end physical count, which is very important and every company needs to do that, shows 4,000 units left at the end. So compute 2018 ending inventory and cost of goods sold. Again, we are doing periodic method, so we don't know what the cost of goods sold is, and we don't know the inventory balance because it's a periodic method. So we have to do it at the end of the year. So at the end of the year, the end inventory count shows 4,000 units left. So here is the solution that you can look at it. Looks like ending inventory is 69,400. And I have also another solution based on the Excel. So just let's remember the ending inventory is 69,400 showing here, and the cost of goods sold 215,900. So if we look at the Excel is showing that we purchased the units from January all the way to December. Total 13,200 units. The beginning inventory is 0 because it's a startup company, so there is nothing at the beginning. So ending inventory is, as you see here, ending inventory is 4,000 units because we counted physically, right? So what that 4,000 units come from? Come from last in, first out. That means the last layers. You see these layers here at the end, let's say something like that. Those are all gone. Last in, first out. So what is left? The top layers. The top is left. Okay, let's go to the top. We go to the top, we take the first one in January, but that's only 600 units. Okay, that's only 600. So that's not good enough. Okay? So that equals technically to that number. Then we go to the next layer to get a little bit more, but next layer has only 2,400. So that equals to that layer. Make sense? And the cost, again, that equals to that cost. Make sense? And the cost here, $17, is instead of typing it, you better just to say equals to that layer. Enter. That layer. Enter. So that's not enough. Just 3,000 is not good. We need another 1,000. So another 1,000, you're gonna get it from this layer. Make sense? So we get that another 1,000, and the cost of that layer is $19. So let's say equals to that box, which is $19. And that 1,000 is technically 4,000 we need minus 3,000 here. That's why we need 1,000 there. The cost is here. And if you add this 3 lines of units, it's 4,000, which is perfect. That's what we want. And we add up this cost in here. Here is the formula. And we have $69,400. And that's ending inventory. And because that ending inventory is the last layer remaining at the end of the year, we call it 2018 LIFO layer. $69,400 total, 4,000 units. And at this moment, we need the average cost. So the average cost will apply to the LIFO layer. So next year, the beginning 2019 inventory balance would be 4,000 units at an average cost of 17.35 with a total cost of 69,400. So make sure you understand that this is your LIFO layer, which goes to next year and becomes the beginning inventory. And it's important to know what's the cost per unit. And that's why you use average costing at that point. Okay, but what is the cost of goods sold? So the cost of goods sold is 13,200 available minus end inventory. And that gives you cost of goods sold. Remember, base, beginning, added, available, subtract, end. So beginning is 0. Added is 13,200, so 0 plus 13,200 is 13,200 minus end gives you cost of goods sold. How many units did you sell? 9,200. What was the cost? Available minus end gives you cost of goods sold, and that's the formula right there. So far, so good. If there is no question, hopefully we can move on to the next question. So here is the question number 2. And let's look at the problem first. And the problem is saying that OPCO, which started in 2000, let's say 17, purchases inventory quarterly and uses LIFO costing under the periodic method. It's 2017 through 19. Inventory records are here. So started in 2017, that means the beginning inventory was 0 at that time. So we don't have beginning. We purchased January, April, July, October, and ending inventory at that point was 900. In 2018, we purchased again several times, but ending inventory at that time was 1400. In 2019, we purchased again several times and ending inventory was 1700. Calculate the company's cost of goods sold and ending inventory for years 2017, 18, and 19. So the solution, it might be a little bit long and kind of confusing. The results are here, okay? And here is the solution, so-called. But we need to know also what is the LIFO layer for each year. So in order to show you the solutions, kind of in one piece, I am gonna go to Excel again and do this in Excel so it is much more clear. Let's go to 2017. So in 2017, we purchased several times. The beginning was 0, but we purchased several times. Available was 7,900 units, and the total cost 146,700. So far, so good. Ending inventory at the end of 2017 was 900 units. Okay, that's fine. But where is that 900 units coming from? The 900 units ending inventory is coming from, because remember, this is LIFO, the last in, first out. So those are all gone. The bottom layers, all gone. The top is left. So let's go to the top. So here we say equals to like 900 units, which coming from right at the top. And the cost is coming from here, which is $17. So 900 multiplied by $17, and that gives us $15,300 ending inventory value. So that means the LIFO layer, and LIFO layer, it's a layer that you need to calculate at the end of the year, and you need to take it with you to next coming year. So LIFO layer in 2017 is 900 units at a cost of $17, total 15,300. So what's the cost of goods sold then? So the cost of goods sold is, we sold 7,000 units, which is 7,900 less 900 left. And the total cost of goods sold is available 146,700 less ending of 15,300, and that gives us $131,400 cost of goods sold. So if we look at the problem here, 15,300 ending inventory, and the cost of goods sold is 131,400. Let's see if it's same as the Excel. Yes. Makes sense? That's how we get it. Now, let's take it to 2008 or 2018, so-called. In 2018, the beginning inventory is the LIFO layer of 2017. So we put that at the beginning as a LIFO layer. Same information will be transferred in here. So this is technically coming from there, and this is technically coming from here, or multiplying this number with this number, and that number is coming from there. Make sense? So 900 times 17, or you can just copy that number right there. Okay, so that's the LIFO layer, but we purchased a few more times at different prices. We add them up. Looks like we have 6,700 units at the total cost of 152,400. But ending inventory in 2018 is 1,400 units. Again, this is LIFO, last in, first out. Last in, first out, that means whatever you have at the end, all these units, the last ones, all gone. The top layer is left. Okay, so let's go to the top. We go to the top, we pick up the first layer at the top, and we put it right here. So that equals to technically that number. Enter. And the cost of that 900 is that $17. Therefore, total is 15,300. So that's the remaining LIFO layer of 2017. But that's not enough because we have 1,400 units left. So 900 minus 14 is 500, right? Make sense? So 500 at which cost? So we took this one already, right? So we go one step down, we go to January and we take the information from there. So that's 500 is coming from here. And the cost equals to that $22 right there. And if you multiply 500 times 22 is $11,000. And that will create your LIFO layer of 2018. Now be careful here. The ending inventory now is consisting of two LIFO layers. A LIFO layers left over from 2017 and the LIFO layers left over from 2018. Yes, I know the total is 1,400 units. And I know the total cost in the balance sheet is showing 26,300 ending inventory in the balance sheet. Yes, but you need to identify each layer separately. You cannot mix them and make a soup out of that. You have to separate them and keep them separate as long as necessary. Okay? You might come back in future and sell your LIFO layers because you didn't purchase enough inventories. At that time, you call it LIFO liquidation. LIFO liquidation, that means you didn't purchase enough inventory, therefore you start liquidating your cheaper LIFO layers that came from back in 2017 or 2018. And if you do that under GAAP, you have to put a kind of notes in your financial statements that this year we were able to increase our profit to some degree because we liquidated our cheaper LIFO layer of 2017 and 18, and therefore, because their cost of goods sold was cheaper, therefore our profit has been increased to some degree, and that was just because of the LIFO layer liquidation. And why you do that? Because some investors may think, oh, this company is making a lot of profit this year all of a sudden. And you need to tell them as a notes in your financial statements as a publicly traded company that, hey, yes, this happened, but this kind of the reason was maybe the LIFO layer liquidation. We didn't purchase enough inventory. That's why we start liquidating our old LIFO layer that we were carrying forward for many years. And because of that, we end up having lower cost of goods sold and a little bit higher profit than normal. Okay, then what is the cost of goods sold anyway? Cost of goods sold is the available, right, less end. So we sold 5,300 units. The available was 152,400 less 26,300. That gives you $126,100 cost of goods sold. And that's the formula for that calculation. So cost of goods sold, 126,100. Ending inventory, 26,300. And if we check that right there, 26,300, and cost of goods sold, 126,100. Let's go to 2009. In 2009, we had already beginning inventory consisted of 2 layers. You see, specifically, I am showing them as LIFO layers of 2017 and 2018. And then we purchased few more units, ending up with $166,200 of available inventory, total 6,800 units. Very good. We sold as many units as we could, but we end up by having ending inventory based on physical count of 1,700 units. Okay, so where is that 1,700 units coming from? Guess what? This is LIFO layers. So these bottom lines are all gone, right? So we go from the top and pick up all left from the top. So we go to the first line from the top and we copy that LIFO layer of 2017 right in here. So that is equals to that 900, and that 17 equals to that 17, and multiply that 2, it's 15,300, which is LIFO layer of 2017. Then that's not enough anyway, so we go to the next layer, we pick up equals to that 500 units, enter, and $22 equals to that $22, enter, and that ends up to multiplying 22 by 500, and that's $11,000. And that's LIFO layer of 2018. We didn't even touch that either. So, but that's not enough. We need another 300 units to get to 1,700, right? So 300 units, we go lower than that. So 900 is gone, it's here, 500 is here. We go one step down, we pick it up from here. So 300 units at $2,500. That's the layer down, enter. And we multiply that 300 by 25, that's 7,500. And we call that LIFO layer of 2009. Got it? Now we have 3 LIFO layers that we carry forward to 2000, let's say 20, the next year. Okay, so what's the cost of goods sold anyway? The cost of goods sold is available minus end. So available minus end is 5,100 units left. 166,000 available less 33,000 is $132,400 cost of goods sold at that point. If you like to know what the average cost is, it's good. If you like to know that, that's fine. But that doesn't go anywhere. Just it's a management information, but doesn't go anywhere. So the important thing that goes somewhere, it's your cost of goods sold that goes into income statement, and 33,800 that goes in the balance sheet. And yes, I know 33,800 goes in the balance sheet, but you need to know what is exactly ending inventory layers, which is in this case 3 layers. Okay, you keep them the way it is, and you carry forward to the next year. Okay, so let's go to number 3, problem 3. Problem 3 is saying that the company provides you with the following information. Ending inventory in 2016 was 600 units at total cost of $7,800. The LIFO layer in 2017 was 700 units, total cost $9,800. The LIFO layer in 2008 was 400 units, total $6,400. In 2019, Agile purchases 7,000 units at $119,000 and sold 7,500 units. So you see here, they bought only 7,000 and they sold 7,500. That is LIFO liquidation. Why? Because they didn't purchase enough inventory and they end up selling. The 60, all 7,000 plus 500 from previous layers. So that's a LIFO liquidation. Calculate company's 2019 ending inventory and cost of goods sold. Okay, so here is the answer anyway, to some degree, I believe. And then it keeps going down like that. But I'm going to show you the Excel, which is more kind of transparent, showing everything. Here is the LIFO layer of 2016, the LIFO layer of 2017, the LIFO layer of 2018. And then they purchased in 2019, 7,000 units at the average cost of, let's say, $17, with total $119,000 cost. Okay, so far so good. However, and those are the average cost of LIFO layer of 2016, which is $13, $14 average cost for LIFO layer of 2017, $16 average cost for LIFO layer of 2018, and $17 the LIFO layer, the purchase average cost. That's what they purchased, $17 each for 119. Now, available, we know how much we have. Ending inventory, it was $1,200. Let me just review that ending inventory. So we have 600 plus 700, that is like 1,300. 1,300 plus 400, that is like 1,700 units, plus 7,000, but they sold 7,500. So if you do the math, you will see that 1,200 units is left. Okay, 1,200 units is left. Okay. Where is that 1,200 units coming from? Remember, LIFO means last in, first out. So this last in, like last in, first, those layers, they're already gone. Last in, first, they're already gone. So what is left? The top layer. Okay, so let's go to the top and pick up the whatever we can from the top. So we go from the top here, and that's only 600 units. So we pick up the whole thing. So pick up the whole thing that is going to stay in the inventory, which is LIFO layer of 2016. Okay, that's not enough. We need to go one step down and pick up another 600 units to make the case, right? So this 600 units is coming from here, and the average cost, the 700 units is coming from here, and the average cost is 13, but that's not good enough. So we go to 2017 and we pick another 600 units, and the average cost is $14 in that case. And if you multiply that, it's $8,400. So from LIFO layer of 2017, you see, we had $9,800. Now it's only 8,400 LIFO layers of 2017 is left. That means it's a LIFO liquidation. So we liquidated a portion of layers of LIFO layer of 2017, and that has to be disclosed in financials, notes to financial statements, that says we had such a situation and we had a LIFO liquidation. And why is it important? Because those are cheap layers that they sold. And if the layers are cheap, they sold, which is, let's say, 2018 is completely gone, and a portion of 2017 LIFO layers is also sold and liquidated. So those are cheap layers, and all of a sudden the gross profit, revenue minus cost of goods sold, is gross profit. The gross profit will be high, and the gross profit ratio will be high. Gross profit ratio is gross profit divided by net sales. And that gross profit ratio goes high, and then all of a sudden investors get kind of, excited. And that's the reason that the company has to disclose and say, hey, don't get too excited, because the reason this happened and we got such a higher gross profit ratio because we did LIFO liquidation. Anyway, so here is the cost of goods sold, which is 7,500 units sold, right? And the dollar amount equals 143,000 minus 16,200, and that's $126,800. And that's the cost of goods sold. Average, you want to see kind of how much was every unit cost? That was about $1,691. But that's just management information if you want it. Okay, what is going into income statement? The cost of goods sold is going to income statement to figure out the gross profit, which is revenue minus cost of goods sold equals gross profit. Gross profit minus operating expenses gives you income from operation. Income from operation, less other revenues or gains or incomes or expenses, gives you income before tax, and then income before tax minus tax gives you net income. So where that 16,200 goes, that goes in the balance sheet as ending inventory. But the company knows that 16,200 in the balance sheet consisted of 2 remaining LIFO layers from 2016 and 2017. Good. Let's go to number 4 in section 6. So the company, number 4, says it's a 2018 startup. That means beginning inventory is 0. And the following inventory information for 2018 includes several purchases, and ending inventory is 30,000 units left. In 2019, company purchased an additional 5,000 units for $150,000. If 2019 sales are 6,000 units, guess what? In 2019, they purchased 5,000 units, but they sold 6,000 units. That's a LIFO liquidation because they liquidated the old LIFO layers from previous year. Make sense? What does company report for 2019 ending inventory and cost of goods sold? Okay, so the cost of goods sold answer is 173,300, and ending inventory should be somewhere here. Okay, I will look at the Excel because as you see here is a lot of information that will be confusing. So here, in 2018, as a startup company, we had 0 inventory beginning, but we purchased several times. Available is 5,700 units at a total cost of 139,400. And ending inventory in 2018 was 3,000 units, right? So let's go back. We say, okay, the ending inventory is 3,000 units. But where is that 3,000 units coming from? And this is LIFO. That means the last layer, last in, first out. So those are gone. So we go to the top and pick up the one that is left from the top. So from the top, here is equals to the first layer, 1,200, enter. And the cost is equals to $22, enter. And if you multiply that, that's 26,400. But that's not enough. We need 3,000. So let's go one step down and pick it up from here, which is equals to the whole 1,500 units. And the cost is equals to $24, enter. And then we multiply that, and that's 36,000, which is exactly the same thing in here. But that's not enough either. We need another 300 units to get to 3,000. So we pick up 300 units here from that layer, July 17 layer. What's the cost? The cost is $25. Okay, 300 times 25, that's $7,500. And then we add them up. That's 69,900 ending inventory in 2018. 3,000 units. And here you need to have the average cost. Why? Because it's a different prices. You have to make it clean. So you go to average cost, which is 69,900 divided by number of units. And that gives you the average cost of $23.30. That you call it LIFO layer 2018. And you take it with you to 2019. Make sense? So by 2018, what's the cost of goods sold? The 5,700 minus 3,000 left is 2,700 units left. Okay? And what's the cost? The cost is available less LIFO layer of 2018. And that gives you $69,500 cost of goods sold. This $69,500 cost of goods sold goes into the income statement to calculate the gross profit. And $69,900 goes into balance sheet as ending inventory balance. So far, so good. Let's go down to 2019. In 2019, we have already LIFO layer. Okay, we have already LIFO layer that came from the top, from here, from here. Okay, from there. So we have that. But in 2019, we purchased 5,000 units at a total cost of $150,000, $30 each. And that's the answer, right? Then we add them up. So total is 219,900 available, 8,000 units. Very good. And the ending inventory for 2019, according to your physical count, we purchased 5, but we sold 6. That means you sold 1,000 units from ending inventory of previous year plus this 5,000. So 2,000 is left. Make sense? So if you bought 5, you sold 6. That means the whole 5 is gone. Thousands of this is gone. So 3,000 minus 1,000 is 2,000 left. Which you know that based on physical count also. You have to do physical count. So we know it's 2,000 left. Very good. And what is the 2,000 coming from? So it looks like, you see the whole 2009 is gone. LIFO, last in, first out. But we sold more than that, right? So we go to LIFO layer at the top, and we say from this layer, we have 2,000 units left. What's the cost? The cost is 2330 right here. That was the average cost of LIFO layer of 2018. Remember, average cost of LIFO layer of 2018. Okay, so 2,000 after LIFO liquidation times $23,30. That gives me $46,600. Okay, so that's what happens in 2019. We did LIFO liquidation. Okay. Now, if this is the ending, then how many units did we sell? We sold 6,000 units, which is 8,000 less 2,000, right? And that gives us 6,000 units. And the cost is available, 219 less end, 46,600 gives us $173,300. And that's after LIFO liquidation. That's the cost of goods sold. So that goes into income statement. 46,600 goes into the balance sheet. And we, as a company, we make sure that we understand the LIFO layer of 2018 is moving to 2010. Okay, so we're not going to have any LIFO layer of 2019, but when we start 2010, we know already that we have a LIFO layer that comes from 2 years before 2018, 2,000 units at average cost of 2330 for a total 46,600. And that will become the beginning inventory for 2010. Okay. Let's go to number 5. Okay, in number 5, the company which began in 2017 and uses LIFO, costing under periodic method, made the following inventory purchases. So in 2017, it was a startup company, so beginning inventory was 0, but they purchased 3 times, several units at different cost, and that's the total cost. In 2018, they purchased again a few more times, and says sales for company was in 2017 4,400 units sold, and in 2018 7,600 units sold. Calculate ending inventory and cost of goods sold for 2017 and 18. Okay, let's do that. So let's pick up this information, go to Excel. So in 2017, the beginning inventory was 0, but we purchased in February, April, and August 7,100 units, and that's the total cost, $149,900. Very nice. Ending inventory, it's not literally giving us what is the ending inventory just to give us a hard time. Normally, you know that by doing physical count, okay? You have to do the physical count. And the problem has to give you that 2,700 units left. But it's not giving you that. It's trying to give you a hard time. So it's saying, hey, I'm not going to give you that, but I'm going to tell you that we sold 4,400 units. Okay, so guess what? If we sold 4,400 units, that means 2,700 units is left. That's what it meant. right? Okay, so where is that 2,700 units coming from? Remember, this is LIFO. That means last layers, last in, first out. Those are gone. So the top layers are left. So let's go from the top and pick up the top. How many? We need 2,700 units. So go to the pickup at the top and pick it up and put it here. So that's equals to the top 2,200. The $20 cost is coming from that cell. Enter. And if you multiply that, that's $44,000. But that's not enough. We need another 500 units. So pick it up from that layer. Okay. And multiply that with the average with the cost of that layer, which is $21, and then multiply, and that's $10,500. If you add them up, yes, the LIFO layer of 2017 will be 2,700 at the end, and $54,000 total cost. But because it's a LIFO layer, we need to calculate the average cost, which is have $20.19. So we're going to take that as a LIFO layer. But what was the cost of goods sold? The cost of goods sold is available minus end, which is 4,400 units sold. And the dollar amount is available, 149,900 less 54,500 LIFO layer. Ending inventory cost, so that will give us 95,400. That's the formula, and that will go to the income statement. And 54,500 goes into the balance sheet showing ending inventory balance. And we need to document that's a LIFO layer of 2017, and we keep carrying it forward till one day in future it gets liquidated. So for 2018, we copied that LIFO layer of 2017 as as the beginning inventory, and we add the number of purchases that we did, net purchases that we did during the year. And we know that available units, we have 8,100 units, and that's the total cost, $188,500. The ending inventory, we know that it's not giving us exact unit numbers, but it's saying, oh, you sold 7,600 units. So if we sold 7,600 units and we had 8,100 available, that means ending inventory is 500 units, right? So 500 units from where? 500 units. First of all, this is a LIFO liquidation because we sold so-called more than what we purchased, and we liquidated literally 2017 LIFO layer to the point that we have only 500 units left. Okay, and what is that cost? The cost is coming from that layer. See, and if you multiply that, it will end up to be 10,093. So LIFO layer 2017 leftover at the end of 2018 is $10,093, 500 units left at an average cost of $20.19. So we take this leftover of LIFO layer of 2017 with us to the next year in 2019 and forward. The cost of goods sold for 2018 will be $178,407. That goes into the income statement, and the ending inventory balance in the balance sheet will be $10,093. Cool. And that is section 6. And we will do section 7 next time. Okay. Have a wonderful day.